What I think investors are missing is if you think about what's propelled U.S. equities over the last 16 years has been growth stocks. And the question then is it that non-U.S. equities haven't performed well, or is the definition of non-U.S. equities potentially a bad one? And I think that's our argument at KraneShares.
I'm your host, Melanie Schaefer. Welcome to Lead Lag Live. Now, over the past decade and a half, U.S. equities have dominated the global investing conversation. But that doesn't mean non-U.S. and emerging markets have been standing still. There's a persistent misnomer that these markets haven't delivered. And in today's environment with a weaker dollar and shifting growth dynamics, the story is far more complex. Joining me today is Brendan Ahern, Chief Investment Officer at KraneShares. Brendan's here to help unpack the reality of emerging markets and, I guess, shed some light on where investors may be overlooking some opportunities. It's great to have you here with me today, Brendan.
Thank you so much, Melanie. Thank you for the opportunity.
So, Brendan, to start out broad, why do you think the narrative has taken hold that non-U.S. and emerging market equities have underperformed for the last 16 years?
Yeah, I think a little bit of this is over the last 16 years. And, remember, 16 years is 64 quarters of opening your brokerage account statement or meeting with your investment committee or board of trustees or directors and trying to figure out why do we hold these non-U.S. equities that only underperform, that since the global financial crisis low back in March of 2009, the S&P 500 is up almost 1,200%, and non-U.S. equities, as represented by the MSCI All Country World ex-U.S. Index, are up basically 1/3 of that, almost 400%. So I think this constant U.S. bull market has really caused many investors to give up on diversification, to give up on asset allocation. Because just these non-U.S. equities don't do anything but underperform. Though I would argue that argument misses a lot of anecdotal evidence about actually areas that have outperformed.
So when we strip away headline comparisons, how have emerging markets really performed relative to the U.S. during that same period?
So, MSCI emerging markets, so S&P, let's call it, will round up to 1,200%. Non-U.S. equities, which obviously is EM plus developed, is up 400. The MSCI emerging market index is only up 310% over the same time period. So just arguably a disastrous result. But what I think investors are missing is if you think about what's propelled U.S. equities over the last 16 years has been growth stocks. And the question then is it that non-U.S. equities haven't performed well, or is the definition of non-U.S. equities potentially a bad one? And I think that's our argument at KraneShares. And we're very well known for KWEB, our China Internet ETF, because it's this growth factor for China. So we don't hold any financials, no energy, no industrials. And lo and behold, all of a sudden, China, it's got good performance. You just got to pull out these growth beta names. And the exact same thesis works in emerging markets, that if you strip out financials, energy, industrials, some firms will be like, if you remove the SOEs, it's not that they're state-owned enterprises. It's that state-owned enterprises are banks and oil stocks. And if you just kick those out of your definition of EM, all of a sudden you have good performance. So the MSCI Emerging Market Technology Index has actually beaten the S&P 500 over the last 16 years. The problem is, tech was less than 10% of the index 16 years ago. So the other 90% of, let's call it value stocks or underperforming sectors, weighed down the performance. So MSCI EM Tech was up almost 1,500% over the last 16 years, but the other 90% did so badly, it brought that EM index return down to 310%. So that's, we kind of took this K-Web thesis and created KEMQ, which just, again, it just pulls out this growth factor, this tech benchmark from the broader EM index. And lo and behold, you've got good performance. So, I love these people who just say, oh yeah, EM, it stinks, but maybe it's your definition of emerging markets is what stinks.
Yeah. And so, Brendan, you've just sort of pointed out the importance of separating factors inside emerging market indices as well. Can you explain what happens when we extract the growth factor from emerging market benchmarks?
Yeah. I mean, the key is you got to go in and get it, Melanie, that you can't just buy broad-based EM because you're going to get these slow, no-growth sectors that dominate the benchmark. So you got to go out and extract them. And again, we did that with China with K-Web, the largest China ETF in the United States, because we have this very differentiated performance characteristic. And we did this years ago with KEMQ. And I think investors would be shocked that this is Morningstar data that year to date, KEMQ had a 769 active and passive index, EM index funds, EM emerging market ETFs. It's the first percentile, and that's after last year, 2024, KEMQ was in the 5th percentile. So it just shows when, and what I think is key is that this is part of when EM comes back, investors are going to gravitate to these growth stocks. Do you want to own ICBC Bank or Petrobras or PetroChina? I don't think so. I think you want companies like Taiwan Semi, Alibaba, Tencent. So that's literally what we've done in KEMQ. And I'm so proud of the results, and still a small fund because I just think, this story it's really so out of sight, out of mind, because people don't realize, there's been great returns in emerging markets and non-U.S. stocks. You just got to go out and extract this growth factor.
So, Brendan, I want to touch for a minute on the currencies. With the U.S. dollar, I guess, showing the signs of weakness this year, what changes are you seeing in the relative performance of U.S. versus non-U.S. stocks?
Yeah, I mean, big picture, part of this incredible 16 years of U.S. equity outperformance has been the huge tailwind U.S. stocks get from the dollar's appreciation. So from its April 2011 lows, the U.S. dollar index hit a peak of, to call it like 50%, but it's come down. It's actually lost about 25, about 14% off of its all-time highs. Now there's a few factors there, Melanie. One is if I'm a non-U.S. investor, if I'm an investor in Europe and I own U.S. dollar denominated stocks, because of the euro's appreciation, I'm actually losing money. S&P 500 might be up year to date. I'm down. And the same is true for yen, Singapore dollar, Taiwanese dollar. So I think you're seeing non-U.S. investors are saying this dollar weakness is hurting my returns in U.S. stocks, and they're starting to rebalance. And they own about 17 trillion of U.S. equities. And I'm not saying that's going to zero. I'm just saying if it goes from 17 to 16 trillion, that rebalance, where's the money going to go? Is it going to go into these value names in Asia and Latin America? I don't think so. I think it's going into growth names like Mercado Libre, Taiwan Semi, Tencent, Alibaba, Anyway, so the dollar's weakness, it might not affect your behavior as a U.S. dollar investor, But I think it's worthwhile that you recognize how it's affecting global investors' behavior because there is a global rebalancing, I think, away from U.S. equities. And it's not going to zero. I'm just saying it is going to weigh on U.S. equities a little bit.
Yeah, so that's what I wanted to ask is how important do you think that currency angle should be for investors who are allocating to emerging markets? And do you think there will be an inflection point for the U.S. dollar?
I think, traveling to visit our global institutional investors across the globe, there are concerns about the dollar weakness. There are concerns about the U.S. political situation, this terrible, bipartisan politics. There's concerns about the U.S. budget deficit. And again, U.S. equities represent 2/3 of global equity market cap. So it's just more of people are taking some profits, I believe, and reallocating that. And I think you're seeing that in the performance of non-U.S. equities this year. And I think particularly in non-U.S. equity growth stocks, particularly in the EM space. So I think it's something just, as dollar investors, you don't necessarily see and feel that, but, talking to foreign investors, it is something that is of concern.
Yeah. And so can we talk more specifically right now about KEMQ? How is it performing versus its EM peers and what differentiates it within the broader EM ETF landscape?
I think what's key to recognize is it's this growth factor relative to EM. So, knock on wood, we've had some really good performance over the last 2 years. Certainly when EM was really out of favor, value stocks, high dividend stocks held up better. So that's where I don't necessarily say to people, you shouldn't own broad-based EM, active or passive. I'm just saying if you're going to go in and reallocate, why not go overweight these growth stocks that KEMQ owns that potentially it's a dial and it's a way to dial up your growth. And I think we see that in Asia, this real growth stock outperformance. We see it in Latin America with, say, Mercado Libre. There's a whole host of examples. So we're really, you can tell we're constructive on the space. I mean, as a shareholder in KEMQ, I've been really happy relative to, my cheap EM beta where I may have paid nothing, but I got no performance for that.
Yeah. So finally, Brendan, for investors looking at KraneShares lineup or comparisons within the space, how should they think about incorporating QEMQ alongside your other China-focused products, such as the flagship KWeb?
Yeah, I mean, I think first and foremost, as a boutique asset manager, this is all we do. So we're not trying to be everything to everybody. So we produce a whole heck of a lot of research on this space. So we want to help investors understand these companies, what their opportunity set. These aren't necessarily household names necessarily here in the U.S. So one, we want to earn the trust of investors through our research, but then certainly KraneShares.com/KEMQ, you can get full transparency on the holdings and this performance.
And where else? You're active on social media, Brendan. Where can investors go to find out more about you and about the funds outside of maybe the website?
Yeah, I mean, certainly we do a whole host. If it's LinkedIn, on X, Twitter, TikTok, just under the KraneShares handle, and certainly for myself, I'm at Ahern_Brendan on X, and also available on Twitter. I'm sorry, on LinkedIn as well. But certainly, at info@KraneShares.com, customer service is job one. We're always available 24/7.
Well, Brendan, thanks so much for joining me, and thanks to everyone for watching. Be sure to like, share, and subscribe for more episodes of Lead Leg Live. See you next time.